The Charlotte Ledger Podcast is a member of the Queen City Podcast Network.
Hey, it's Tony Mecia with the Charlotte Ledger, and you're listening to the Charlotte Ledger Podcast. You can find out more about the Charlotte Ledger at thecharlotteledger.com. Sign up for one of our newsletters and stay in the know about Charlotte. In today's podcast, we're sharing a conversation I had recently with Mark Vitner, one of the Charlotte region's best-known economists. He retired from Wells Fargo in 2022 after about 30 years at the bank. He's now out on his own at Piedmont Crescent Capital in Charlotte, and he regularly briefs local policymakers, businesses, and community groups about the economy, and in particular, the economy in Charlotte and the Carolinas. That's certainly a hot topic nowadays, which is why he and I had a conversation. We talked about the recent stock market ups and downs, the effect of tariffs, what's going on with the economy, what's going well, what's going not so well, and what the danger signs are, and the odds of a recession, and how it all might play out here in Charlotte. Many thanks to Mark for making himself available to talk about this timely topic. Here's our conversation. Mark, great talking to you. Thanks for joining me on the podcast.
Well, it's good to see you.
All right. So obviously a lot going on with the economy right now. It seems like it's at the forefront of people's minds. The market's been pretty volatile the last few weeks. There's sort of a lot of questions about what's going on with the economy. What's your take?
Yeah, there's a real sense of deja vu. I've been through a lot of these. I mean, I'm old enough that I remember the 87 crash and certainly the dot-com bust and then the global financial crisis. It kind of has the feel for that in some ways, but it also is different from anything that we've seen before because the underlying fundamentals of the economy are still pretty sound. But this trade war is, it's taken us somewhere that we really have never been. I mean, I try to stay away from the politics, but the U.S. has always been a force for good. We've always been the leader who's done the right thing on the global stage. And, I think that may be what we're seeing in the bond market and in the value of the dollar, which is leading to the volatility in the stock market. They're really taking their lead from what the stock market takes its lead from the foreign exchange market and the bond market. They're the honor students. The stock market are the guys that sit in the back row.
All right. So when you say that the economy is fundamentally sound, I'm guessing that's on data that is at least a few weeks old, but it can be, I think, very unsettling to people. They see these headlines of the stocks just plummeting one day and then going up a little bit the next and plummeting the next day. It's very unsettling. And the word you keep hearing is uncertainty. I mean, what do we know about the strength of the economy right now?
Yeah, the economy usually looks a lot better in the rearview mirror. The data that we're looking at is mostly through March. And so it's behind us. And I guess the good news for the stock market's perspective is that earnings are also through March for the most part, and they're likely to look pretty good. The unemployment rate's low. It's 4.2%. That is right at the level that the Fed thinks is full employment, meaning that everybody that wants a job and is capable of doing that job has a job, and that it gets really harder for businesses to fill jobs with skilled workers. The inflation numbers have actually been coming down. But tariffs are scaring people, inflation expectations, at least in the University of Michigan index, which I was just working on. And I had to enlarge the scale because it shot up to the early April reading on the University of Michigan survey shows that consumers are expecting inflation to rise 6.7% over the next year, which is about double what economists expect, which has been increased by about a percentage point since the trade war started.
So what's the outlook here? And I know a lot of it probably, any good economist will probably say, well, it depends. But I don't know, it depends on a lot of different things. But, the question is this some sort of, negotiating strategy then these tariffs are going to be short-lived? Or is this something that is sort of a permanent switch and these are actually going to be in effect? I mean, what do you see as the most likely outlook?
Well, I put a piece out, and the last piece that I wrote, which was right on Liberation Day, I was trying to take a more optimistic spin, and I said, the odds of recession are certainly increased, but I'd say it's narrowly in favor that we don't have a recession rather than we have one. And I still feel like that's the case. I mean, the natural tendency is for the economy to grow. But one of the things that I'm watching closely and concerns me is airline revenue passenger miles. It's kind of an obscure number. We get it pretty much the first day of the month. The airlines have been warning that their traffic is way off. It is one of the best real-time indicators that we get it relatively early. It has a high correlation with GDP growth. The decision to get on a plane to go do business in a different part of the country is a risk-adjusted rate of return calculation. And when uncertainty increases, you have to have a higher return in order to justify any investment. And so I'm beginning to tilt more toward the recession camp, that it's slightly more likely than not. And when you open the door to a recession, you really don't know what you're going to get. I mean, everybody says, well, it'll be a mild. I think the base case is recessions tend to last for 9 months. And there's not really any such thing as a mild. It's
right.
I mean, it's only mild to the people that hold on to their jobs and don't see their incomes fall. But, for most people, the stock market's not priced for a recession. Even after the decline that we've seen, we probably need to see another 10 to 15% pullback in stocks if we actually did have a recession.
So what would that look like, especially here in Charlotte and the Carolinas? If we were to go into a recession, what would you expect to see? What would be some of those leading indicators? I know you mentioned the airline revenue miles, but I mean, what are some of the things we would expect to see, and then how would it play out?
Well, Charlotte has been one of the exceptional areas in the last year, which is kind of, it reminds me a little bit of the financial crisis, and that Charlotte was booming right up until the crisis. And we were actually an outlier. We were outperforming our peers. And that's where we are right now. In the last 12 months, Charlotte has added more jobs than Atlanta has. And Atlanta's 2 to 3 times bigger than Charlotte. And I'm not talking about percentage increases. I'm talking about the absolute number of jobs, 24,300 net new jobs. And we've also outperformed our peers, Raleigh and Nashville, Orlando, Tampa. It's just kind of Jacksonville. I'd say those are our regional peers, or Austin, Texas, for that matter, added more jobs in Austin, Texas. That will come to an end. We will see that as you go into recession, businesses begin to focus on cost cutting. They become more risk averse. They hire less. And we will see that job growth will slow and probably decline. The unemployment rate will rise, largely in line with the nation. But just as with the U.S., Charlotte remains an incredibly attractive place. It's a magnet for young college graduates. Companies like to hire young college graduates, and companies that like to hire those folks, they're likely to continue to move here. So I'm not worried that it's going to throw us off track longer term, but a recession would be painful for the area. And I worry about commercial real estate, because it looked like we were beginning to get some traction and move past the commercial real estate cycle, particularly the office area, which is kind of the scariest area. But yesterday, when I went out to lunch, the one thing I noticed was how much more traffic there was on the road. And if you travel midweek, Tuesday, Wednesday, Thursday, everybody seems to be back in the office. But if Monday, Friday, not so.
Yeah. So I know a lot of times, when you're talking about the economy, there are a lot of different factors that go into it, and some things are strong and some things are kind of weak. What are those? I know, like in the Great Recession, a lot of it was centered in real estate and the financing of real estate. But what are some things, as you look at the economy currently, what is going well and what is going not so well?
Well, there's been more going well than not so well. Particularly locally, and not just Charlotte, but all of the Carolinas. South Carolina has actually been growing faster than North Carolina. I think that what happens, what causes recessions is that in the good times, and we've only had 2 months of recession in the last 15 years. That's exceptionally few. In the good times, excesses build up where people get a little too complacent. They take on too much risk. And then a recession, all of a sudden, they suddenly all become risk averse at the same time, and everybody pulls back. That's what brings about a recession. So think about where we had too much. We really didn't overdo it in office development. Charlotte did a lot. We have a little bit more than most cities because of the rise of South End. Where we've seen just an incredible amount of development has been the apartment market and the warehouse market. So in commercial real estate, those are the two areas that worry me. We really didn't have much retail development. We do worry that if we have a recession, suddenly the strong demand for apartments stops on a dime. It gives us high vacancy rates, and we may see some credit problems that come out because of that. Consumers are also a little extended. I mean, you look at the amount of debt that consumers have taken on. It's not high relative to assets, but of course, stock prices are coming down, home prices rising less rapidly. I don't think we're set for anything like we had in the financial crisis. Housing is in short supply. For sale housing is in short supply. We're not suddenly going to be inundated with a supply of new homes. So I think home prices will probably rise more modestly, but they're not likely to crater like we saw previously. And the people who own homes largely are in good shape. Home equity is really built up, not just because of home price appreciation, but during the financial crisis, a lot of people refinanced at low interest rates. So their debt burden, their monthly mortgage payments are relatively low. So we're not likely to see as many people run into trouble if we have a rise in unemployment.
And then one final question for you, and you sort of alluded to this, but I know a lot of times in Charlotte, we like to think that we're sort of immune from what's going on in the broader economy, especially because people who live here, like you said, for the last 15 years, it's been go, go, go. It's been gangbusters growth for the most part. But, certainly we're tied into what's happening nationally and internationally. What are some of the characteristics of the Charlotte region's economy that set it up, either better or worse in the economic times that we're in, as if we're headed in a direction that we hope we don't go in?
Well, I think the number one driver for Charlotte is that we've been a very attractive place for businesses and young people, and kind of on the echo boom basis, their parents, because I think we're like the number one market for baby chasers, which are parents of younger folks who have kids, so that parents want to live closer to their grandkids. And Charlotte's kind of ideally situated for that because they could move to Fort Mill or they could move to Tega, and they're not even in the same state, so they're not crowding too much, but you can still drop the kids off and get away for the weekend. Having a hub airport, so if you were to look at cities, kind of the characteristics of Charlotte, that we're a regional hub, there's a lot of economic activity around us. And one of the things that surprises people, I tell people this all the time, there are more people live within 100 miles of Trade and Tryon Street than live within 100 miles of 5 Points in Atlanta. So there's more people, 8.5 million people that live within 100 miles of Charlotte. So that makes this like regional center. People come in for football games, basketball games, concerts, to go shopping in Southport. That's not going to change. I mean, the other thing that moved into our favor after the pandemic is that we saw this enormous affordability migration from high-cost parts of the country, California, New York, South Florida, and that's actually gained momentum. And what we've seen the last 2 years is an accelerated outflow out of Florida. So we've got a lot more Floridians that are moving here, and continued inflows from the Northeast. Yeah, that will slow down. Fewer people move when you go into a recession. If you're not concerned about your job and you don't have anything lined up, you're like, I don't want to make things even more uncertain. So yeah, that will get interrupted, but I don't think that will change. The arithmetic doesn't change. I'm willing to bet that if you look at other cities that have a major airline hub, Charlotte is probably the lowest cost place to live and to headquarter your business if you are dependent on travel of any of those. I mean, that's like Atlanta, Miami, Philadelphia, Dallas, Denver, Los Angeles. I mean, the cost of living in all those cities, if your airline travel is important to your business, Charlotte is a great deal. And that I think will continue to work in our favor once we get to the other side of this.
Okay, that's a wrap. To our listeners, thank you for listening. Find out more about the Charlotte Ledger at thecharlotteledger.com. This episode of the Charlotte Ledger podcast was produced by me, Tony Mecia.
QueenCityPodcastNetwork.com.